often speak of moments when the stock market tends to do well. We know there's seasonal periods and patterns that are terrific. We know that stocks thrive, for instance, when interest rates are going down. But there's another auspicious moment, and that's when the conventional wisdom collectively decides that because of extenuating circumstances, in this case, a welcome break from ever higher tariffs, we're no longer at risk of a recession in the near future. For as long as I've been in the business, that's a terrific time to buy, and I think that's where we are right now. When we look back at this week, a very bullish one, we're going to remember it as a time when Wall Street analysts, particularly the strategists, took the recession concerns off the table. And that's why we had such a terrific run, including this fabulous industrial-led rally that we got this week. Why did this happen? Not that long ago, when we were all terrified of how bad Liberation Day tariffs would be for retail, a budding consensus emerged that our consumer-led economy simply couldn't hold up under the weight of these tariffs, and a recession, well, it was inevitable. Then we got the 3-month stay of execution of the global tariffs, which mattered, but we still had the huge China tariffs, particularly almost like an embargo, which could have done real damage. Certainly there would have been shortages. But fortunately, on Saturday night, there was a break in the talks with China, and while there are still some tariffs, they're not going to be big enough to wipe out the economy. So the companies that were levered to economic growth, think about companies like Caterpillar, United Rentals, Deere, saw their stocks buoyed by the removal of the recession worry. You saw some of that at work yesterday when Deere reported a solid quarter, but was cautious about the future, something that would have at one time sent the stock down a few weeks ago, but this time actually spurred a rally in the company's stock. You also saw it when Walmart reported a terrific quarter yesterday, and the stock went up at first before plummeting when management mentioned the need to stay concerned about tariffs. The stock then rallied back, though, and continued to move higher today, something that would never have happened if people were still worried about a near-term recession. It's so prevalent in the market's dialogue right now that UBS came out with a terrific term for it, the contained downside scenario. They think that, quote, lingering uncertainty will be somewhat of a drag on demand, end quote, but that we're going to get through this. Why is this switch so big? Because when money managers believe there's a high chance we're headed for recession, they not only sell a lot of stocks, they also short bet against anything with economic sensitivity, like the industrials. When the chief catalyst for these short positions, the imminent recession, suddenly dissipates, these short-selling hedge funds have to buy back stock to close out their positions because there's no longer a thesis for them. The stocks they tend to short, things like Caterpillar, United Rentals, Cummins, the paper stocks, building products, chemicals, truckers. When the hedge funds come in to cover them, because it's a concentrated group of stocks they bet against, well, they give you what we sold this week. Now, we haven't yet seen the actual hit to the consumers from the tariffs, and that is going to come now. Walmart made that abundantly clear. We also don't know how much the consumer will ultimately be hurt. That depends on how much of the tariffs get eaten by suppliers or retailers and how much will get passed on. That's one of the reasons why people feel this is the end of the rally. Still, though, if hedge funds thought we were about to experience the apocalypse, and many of them did, then they were poorly positioned coming into this week. And when hedge funds are poorly positioned, you get incredibly motivated buyers like the ones we saw all week that helped take us all the way almost back to even. And they may not be done with all of their buying, at least, because we're suddenly in a very different world with the pessimists having been caught with their pants down. Until they turn optimistic, which might take a little bit, we should remain in good shape. I like to say there's always a bull market somewhere, and I promise I'll find it just for you right here on Mad Money. I'm Jim Cramer, and I'll see you Monday.